Welcome everyone to our presentation. My name is Cynthia Asen. I'm the owner-broker of Investment Revenue Realty. Today we're going to look at why real estate makes sense, where real estate investment offers the best returns. I'm going to introduce you to Western Canadian Properties Group, who are building brand new cash flowing properties in Northeast BC. Their turnkey program that makes it easy for everyone to buy, hold, and build wealth. At the very end, we'll have a limited time offer that will make this opportunity even that much better. So welcome. The focus is on helping clients buy brand new cash flowing properties, offering a fully managed service. What makes investing in real estate so attractive is there are three ways to generate return: cash flow, appreciation, and mortgage paydown. Let's take a look at a $200,000 purchase. This requires a $50,000 down payment, so that's your invested equity. If the property generates $50 per month, that means you earn $600 per year, generating a cash flow of about 1.2% on your down payment. So if I take the average interest rate over the past 30 years, which is about 6%, I know this is hard to believe as it seems interest rates have been very low for a very long period of time, which they have. The reason I'm bringing it up is to show you why buying and borrowing today makes so much more sense than it did when I started buying in the mid-90s, and I'm very happy that I did that. Not only were payments 20% more, the amount going toward principal reduction 25% less. With today's interest rates at 2.99 or less, your payment is much lower, and approximately half of it is going towards paying down the principal. In our example, that means $4,000 a year that your tenant is paying down, earning you an 8.2% return on invested equity. Pretty sweet getting someone else to pay off your debt. I knew there was a reason I like real estate. If you borrowed money to buy stock or mutual fund, you would still have to pay the loan payment on that borrowing every month. In the case of the property I'm showing you today, not only does your tenant pay off your mortgage every month, he or she pays your property taxes, your condo fees, your property management fees, plus they are putting $350 in your pocket each and every month. The real upside to real estate is in the appreciation, because you're able to use leverage. Each 1% that the market appreciates earns you 4% annual return on your down payment. Leverage is a simple concept that you're able to buy an asset without paying the entire price of the asset in cash. Very few other investments let you borrow 75 to 80% of the purchase price. Think about it. Banks, who are not known as the world's greatest risk takers, are prepared to lend you 75 to 80% of the value that you're acquiring. If you borrow $200,000 to buy a $250,000 investment property and put $50,000 down, your property goes up by 5%. This means that in the first year you've seen a gain of $12,500. This is giving you a 25% annual return on your investment. Very good. We model everything on a 3% appreciation. If you've looked at the statistics over the past 35 years that have been measured by Canadian Real Estate Association and StatsCan, real estate is appreciated on average about 6.5% per year. We look for markets that are going to offer higher returns because we're going to areas that we know money's being invested, and that will drive industry and drive job growth and population growth, increasing the demand for housing. So really, our mission is to help clients create wealth through well-selected real estate, buying in the right market at the right time. We want to make this process very easy and simple and attainable for everybody. Stop looking in the rearview mirror if you want to drive to your destination. It doesn't matter what happened last year, how much the market appreciated or the values went up, yet every news report I hear uses old news to talk about the real estate market. Knowing what to look for makes it easy to find the best markets. Where is a lot of money being invested to build industry? Building industry means jobs, means people moving to fill jobs, and people needing housing to live. Very basic, very simple. This is what we do. Ours is a fully managed service. You purchase, you close, we manage all of the rest of it. We hire experts in the marketplace to look after your property. The track record for the management team, they've developed over 85 projects throughout North America. They've placed over 12,000 units in the hands of investors through a program that we're offering today. Because we're building brand new, we need quality builders. The builder for Western Canadian Properties Group has relocated his family to Fort St. John. In 2012, he was nominated for a number of Georgie Awards. The highest distinction he won, the Grand Georgie for the Residential Community of the Year, which was Qualicum Landing on Vancouver Island. And so we're very proud to have him building. This is an overview of the site that Western Canadian Properties Group purchased in 2012. They purchased it believing that they would be there anywhere from 5 to 7 years. The site is currently, at the end of 2016, will be completely developed and fully sold out. So they're ahead of schedule because the market demand is there. Where is Fort St. John? Fort St. John is located in northeast BC. It's about an hour and a half northwest of Grande Prairie, Alberta. It has a very diversified economic base. It's not a one-horse town. Right now, with the new projects approved or in the approval process, Site C Dam, liquefied natural gas, pipeline, we're looking at over $90 billion for a population of 67,000 people. 2014 Site C Dam was announced. And for those of you that don't know, Site C is the largest public infrastructure project in Canada. It's a very diversified employment base. It has the second largest OSB plant in the world. It's located just outside of Fort St. John. Looking at all the activity, the consortiums are large international companies that are staking their claim to access the commodity, and the commodity we know as natural gas. Our research follows and tracks the economic fundamentals. So what we are looking for is when the investment starts to come in, trying to determine how long the cycle might be. This is an indication of what was going on in the area in 2007. In 2008, there were record land sales in Northeast BC, and for the past 8 years, we've watched the drilling activity expenditures grow exponentially. The current production is about 3.5 billion cubic feet a day, and this is expected to almost double to 6 billion cubic feet by 2020. If you recall, in 2012, CNOOC purchased Nexen, and the Harper government had to bring in new rules. That was one of the largest acquisitions of a Chinese company or an overseas company to that date. We're seeing a lot of activity. Petronas purchasing Progress Energy. Their drilling activity has been increasing year over year. And then we have another consortium, Pacific Northwest LNG, lots of drilling again. You're seeing these three partners, almost 60 billion in drilling. So again, we know that this drilling is going to produce the gas that's going to be required to fill the terminals on the coast. So when you look at capital investment, capital expenditure, we look at where's the money being spent. We all know Kitimat and Prince Rupert areas have been very hyperactive for a number of years, and that's because the terminals, all the lead up to building the terminals, whereas the Fort St. John, Dawson Creek area has steadily seen increases year over year, both in the prices as well as the rentals. The red is related to the LNG export terminal activity, the green to the pipeline construction. The coast activity is related to LNG. Our research suggests that job growth is more sustainable to the region that has gas. It is estimated in the Fort St. John Dawson Creek region over 30% of North America's natural gas, third only behind the Texas oil sands and the Alberta oil sands. Long-term drilling activity is required to feed the terminals. Currently we are producing gas to fill 1/3 of one terminal, and there are 20 proposals on the table. The Horn River and the Montney Basin are the source of the gas. This activity is driving the population growth, and experts expect the region's population to double in the next 4.5 years. We've seen that population growth in Fort St. John, as it is one of the fastest growing cities in Canada. We know that 80% of the newcomers in the province rent for the first 2 years. This really drives the demand for rental property, and in small centers like Fort St. John and Dawson Creek, that can really increase the rents dramatically. What we've seen is vacancies have dropped and rents have increased. We've all heard the rumblings. We were all talking about the drop in oil. What's going to happen? We get that question often. What we have seen is last year, 10 billion projects were given the go-ahead. We know that Site C Dam is an $8.9 billion project. This region is experiencing the highest amount of capital investment per person of any region in the country. We know that Site C construction is happening. It is located only 10 minutes outside of Fort St. John. It's the third facility on the Peace River after the WAC Bennett Dam, which was completed in 1968, and the Peace Canyon Dam, which was completed in 1980. We've seen BC Hydro award contracts on the North Bank's activities. A lot of it is the staging, getting ready to move the materials to start the construction of the dam. This was taken in September of 2015. What this does, it means 33,000 direct and indirect man-hours of labor. According to a recent report by AltaGas, there will be 4 LNG plants built. Probably not in the order that we thought. First, we'll see AltaGas project finish in 2018. Now, AltaGas recently purchased 540 acres just outside the municipal boundaries of Fort St. John. They are building over 100,000 square foot liquefaction plant to produce gas to ship by truck to Alaska, a truck every 8 minutes. Shell received a joint federal-provincial environmental assessment approval, and they are commencing, this project is anticipated to commence and get final approval early 2016. Petronas has been in the news. Petronas made its final investment decision subject to some conditions, and what we're seeing is that a lot of that was related to the First Nations. We are seeing the First Nations taking initiative and negotiating impact benefit agreements for themselves. And the sleeper of it all was ExxonMobil, which just last year, early this year, announced that it was giving a go-ahead to go to the next stage of a $25 billion terminal. So that's what we believe will happen. 4 of the 20 LNG projects will go ahead. But in addition, there's a lot of forestry workers that are being employed. The rebound of the U.S. housing market has certainly increased the activity in the forestry industry. The estimate is there will be 20,000 new jobs between now and 2020, all related to natural gas. This is what you should know about Northeast BC. It's very cold. And why we bring this up, it seems to be obvious, is that it means the building season is very short. This really contains the ability to deliver housing units. The City of Fort St. John has done numerous reports on how they're going to meet the upcoming demand, especially with the advent of the Site C Dam. The government of British Columbia recently built a $350 million hospital in the city of Fort St. John for a population of 27,000. There certainly must be an expectation of a lot more people moving to the area. Major transportation infrastructure upgrades are underway. They're twinning the highway between Grand Prairie and Fort St. John. What we do know is who's moving up there. They're very young. They're very high income earners, and they're very interested in the jobs that they can be offered. We also know that people are asking us, there's a man camp being built. Yes, BC Hydro has to build a man camp to service and house the people that they need to start the construction. We do know that 60% of these people in the camp will actually rent or own in the community that there is nearby. One of the biggest problems that's facing Fort St. John is the real severe shortage of land. Recently, they amalgamated an extension to the area. The area above the highway is residential, and they anticipate that even with this increased land base, that will only take them out another 2 years. We're on the ground, we're renting, we're building, we are in that community. So what is the current state of the market? We know 71% of all the dwellings were constructed before 1986. So as a young person going up looking for a place to rent, this is typically what your choices are. We know that CMHC has recently said the vacancy rate's up in Fort St. John at 4%. Just a note, CMHC measures all the rental purpose housing in the entire market. So all that old property is also put into our rental vacancy rate calculation. We know that we're 100% rented. These are examples of our townhomes. They're 1,000 square foot, 2-bedroom, 2-bathroom. They're priced at $289,900. They rent for $1,600 a month. They're pushing out about $250, $300 a month positive cash flow after all expenses, including financing. Recently, as I do this presentation, this building is completing. It's 50 units. It's the first 5-story apartment building with underground parking north of Prince George. Leasing is already at 30 out of 44, or roughly 70% of the available units have already been rented, and the building hasn't even completed. The asking prices on these are $269 to $299. Average square footage, they're roughly 900 square feet, 2 bedrooms, 2 bathrooms. Again, positive cash flow, very easy to rent. Our track record, 2014, all the units were leased before closing. They sold 100 pre-builds. They sold over 200 pre-builds, and they leased 100 of them in 11 months. And in 2014, over 145 units were leased. You have 2 teams working for you. Sterling Management Service, which is a local property management service that looks after approximately 2,500 rental units for investors in the region, and Western Canadian Properties Group, which is the developer. On the ground, you have Western Canadian Properties Group. They're touring the properties. They're doing a lot of initiatives to fill those newly built properties, while Sterling will do all the administration, screening the tenants, creating the leases, ensuring the monthly statements and the deposits are made, and managing all the programs that are being offered. Some of the interesting things that are being done: unique websites that drive traffic, shopping cart advertising, videos in Kijiji ads, Facebook pages, social media. Lots of market exposure ensures that you're in everybody's, first and foremost in everyone's mind. On the ground site, leasing signs that are attractive and professionally done, getting all the foot traffic. A show suite that features the insides of a typical unit so people can see what they're renting before they actually sign the lease. We also have a very comprehensive corporate leasing program that's managed. All of the major employers know who we are, know what we have to offer. Western Canadian Properties Group and Sterling Management have developed a furnished rental program that allows you to be able to share the cost of the furniture. What it means is you get increased rent benefit without owning the furniture. What this is attributed is no vacancy. So when lots of times in the market it ebbs and flows, and there's lots of times there's a need or desire for furnished rental, but not all the time. So we can move the furniture around as need be. What does this mean? You are offered the opportunity to share the furniture cost. You don't have to pay for all the cost to furnish your entire place. It's organized and managed by the property manager, and you get increased revenue when your suite is rented furnished. Typically, 25% of the rentals are furnished. It also means you don't have to store, repair, or replace furniture. More money with less hassle. Today's opportunity is limited. It's limited to 5 remaining units. The developer is required to meet a pre-construction financing threshold, and they have offered a significant cash back at closing to any of these investors that take advantage. It can be up to $12,200 depending on the suite selection. This is the building. It's a 5-story, 50-unit building with underground parking. It's the second building north of Prince George that will have underground parking. The purchase prices include one energized surface parking, vinyl plank flooring, 5 appliances, and blinds. And right now, these properties are rented between giving off $150 to $350 positive cash flow on the current building that we're running. Here is a typical floor plan of a 2-bedroom, 2-bathroom. These are the larger corner units. The split design is called a California split. It's a living space in the middle. Open concept living, a great way for 2 roommates, lots of privacy between the two. So it really is a good layout for renters as well as families. This is the smaller floor plan. It's interior unit. Again, maintaining the split and open concept makes it feel a lot more spacious without sacrificing the division and the privacy. Every property that we have for sale, we can generate a customized worksheet for your purchase. We can put the financials that you want, the interest rate, the amortization, and the down payment. So it can be based on your mortgage preference. This is an example of a second floor unit with the rebate, after rebate. So you can see the discount. As I mentioned, every property comes with the vinyl plank flooring, 5 appliances, blinds, in-suite laundry, and an energized surface parking stall. If you use the mortgage cashback incentive to pay down your mortgage, the returns are significantly improved over the 5-year horizon. Based on the rent that we're forecasting, which is pretty much being achieved at this point, using the mortgage pay down, that returns 92% over 5 years. So factoring in the appreciation at 3%, you're looking at a 26% annualized return. We really like the advantages of buying new. It stands the test of time. You can secure with a small down payment, save up until your completion. New properties, they're being built with maintenance-free durable finishes, energy-efficient materials, everything separately metered, so you pass the utility cost on to your residents. 2-5-10 warranty means you shouldn't need to put any more money into your investment for up to 10 years. If you're interested, it's a very simple process. We can actually hold and reserve a unit for 48 hours. Then we would need to have an offer in place. The offer can have a condition to you getting financing. We need a $15,000 deposit upon signing of the offer, but the second deposit would not be due until February 2016 and the completion winter of 2016. So really it gives you the opportunity to lock in today's prices. So the best way to understand this market is to discover it for yourself. I offer the opportunity to all my clients to see it firsthand. If you buy, I will include a refund the cost of your airfare and closing. So it's really a risk-free way to look at the marketplace. Nothing better than making informed decisions, so we offer ongoing workshops, mortgage strategy workshop, how to structure your corporate assets to buy real estate, what's the best ownership structure for you or your partners to own in. The ultimate is to be able to increase your rate of your return on investment without increasing your risk. And we've got some excellent speakers at this event on the 17th. We encourage everyone to attend. And then September 30th, we're going to be offering the 6 to 8 p.m. We offer this presentation often. It talks about the 2 best markets. We really like Northeast BC and Phoenix, Arizona. It's always the hardest to take the first step. I encourage everyone that thinks real estate is a good investment to look at our opportunity. Northeast BC is going to lead the country, regardless of what people believe. We know that gas is a bridge fuel. It's a clean energy source, and Northeast BC has a large supply and abundance. We hope that you'll take this into consideration and you'll work with us and invest with us. If you have any questions, my name is Cynthia Asen. I'm the owner-broker of Investment Revenue Realty. My associate, Taylor Steele. This is our contact information. Feel free to reach out and call or email with any requests or questions. Thank you.